Hello, welcome back to Accounting Part 2, Financial Statement Interaction, Integration, as well as a basic overview of the major accounting ratios and how to analyze the actual numbers that we'll be looking at. So, continuing on from our Part 1, going over the brief discussion of our financial statements. One real quick note on non-recurring / normalized expenses. Whenever you are looking at financial statements, you always want to try to make sure you always, as we said before, you want to get the ongoing run rate profitability as a going concern of this company. Going concern simply meaning they're not going to go in bankruptcy. They will still be sticking around. So if that's the case, whenever you're looking at your numbers, you always want to make sure you include, or rather you exclude the effect, or you include the deduction of restructuring charges that will not happen again in the future. Otherwise, you will have distorted numbers. You want to make sure you back up items like extraordinary items and other one-time, discontinued operations, accounting changes, etc. What are some examples of these? Examples are inventory and asset impairments, gain or loss and sale of assets, disposal of subsidiary, that's a discontinued, early retirement, outside events, one-time management, layoffs, etc., etc., etc. So the idea here is you just want to make sure that you're able to fully capture, once again, normalized, ongoing, core, recurring profitability. And in our section on, and our module on the quick and dirty trading comps, as well as our more complex very difficult trading comps analysis and making adjustments for all these one-time items, in which we'll capture 90% of all major items out there that you will encounter in the universe of analyzing companies. You can look at those modules to get a better sense of how you will actually physically adjust for these items. But in the meantime, what I want to do now is let's take a look at our basic financial and accounting ratios, of which there are several categories.